Come on guys, let's now discuss chapter 15 of your syllabus, which is branch accounting. One of your favorite topics which has hardcore accounting to it. Let's begin. So in this topic of branch accounting, to do accounting, we divide the branch into two categories. One, branch there, branch which is situated within the geographical boundaries of the country. That's called as inland or domestic branch. The branch which is outside the geographical boundaries of our country, which we call as foreign branch. We'll discuss foreign branch towards the later part of our discussion. Right now, our focus will be concentrated inland or domestic branch. Further, inland or domestic branches will be classified into two categories: dependent and independent. Dependency is in the business world seen slightly different from the accounting. In the business world, it is based on the operative and financial decision making. The branches depend on the head office for goods. The branches depend on the head office for money, decision making, sale price fixation, hiring employees, location of business. Then it is dependent branch. In business world, but in this topic we are only focusing on accounting. In this topic we decide a branch as dependent branch if the branch does not have accounting, and accounting of the branch should be done by head office, then it is dependent branch. On the other hand, if the branch has an accountant, the branch can do its accounting on its own, the branch will not be called as dependent branch, it will be called as independent branch. Right now our discussion is now focused to dependent branch. Later we'll come back to independent branch. Further, for the purpose of accounting, this dependent branch can be classified. This classification now this time is based on the rate at which head office will choose to send the goods to branch. If the head office decides to send the goods to branch at cost price or invoice price, treating the branch like a debtor, it will be treated as accounting to be done under one of the three methods: debtors, stock debtors, and final accounts. However, if the head office treats itself as a wholesaler and treats the branch as a retailer and sends the goods to branch by booking the wholesale profit, then we'll apply another method called as wholesale price method. Now we'll focus on these three methods: debtors, stock debtors, and irrespective of the fact whether you use debtors method, stock debtors method, or final accounts method, end up getting the same profit as others. To begin with, let's see debtors method. Under this method, head office will treat the branch as a debtor and branch owes money to head office. Head office in its books will open one ledger which is like debtor, but it will be called as branch account. That branch will be one separate ledger for every branch. Let's say I have 4 branches: Chennai branch, Hyderabad branch, Mumbai branch, Pune branch. I will open one ledger for each of them. Chennai branch account, Mumbai branch account, Pune branch account, Hyderabad branch account. We'll open 4 separate branch ledgers. Each branch account, debit side I'll write the opening balance of assets in the branch. It can be stock, it can be furniture, it can be any other asset, cash balance, bank balance, debtors, everything that's there at the branch as an asset is mine, and I'm supposed to receive it from the branch. So in my branch account, I would write all the opening balance of assets on the debit side. All the closing balance of the same assets will be written on the credit side. See, branch asset, branch debtor, branch cash, branch petty cash, branch stock, all of them. If in case at the branch there is some liability, opening balance on the credit, closing balance on the next, whatever I send to branch will be written on the debit side. Whatever the branch sends to me will be written on the credit side. Then if I find the balancing figure, that would be my branch. And in this process, throughout the accounting when it is done, head office is treating branch as a debtor. If you send something to branch, value at the branch will increase, debit the branch. If you receive something from the branch, value at the branch will decrease, credit the branch. Basically, branch is your debtor. That's what I did mention. And next thing that you would have to have is assets, debit side, opening balance, closing balance, credit side, liabilities, opening debit balance, credit balance, closing debit side. And there are certain transactions which are ignored. If the transaction is happening between branch and third party, head office will not do accounting. This is because accounting is done for the branch but by the head office. Accounting is done for the branch but it is done by the head office. This is debtors method. I can discuss journal entries, but I'll keep it pending for now. What will I do? I'll teach you stock debtor system and we'll see debtors and stock debtor system journal entries simultaneously. Flip to stock debtor system. Under stock debtor system, what we do is we'll treat the branch as a debtor, but there is a small upgrade. This method is improvised version of debtors method. Under debtors method, like I mentioned in the ledger, We write opening balance of assets on the debit, closing balance of assets on the credit. In that opening balance of assets, it is not asset but assets. There are several items that are stock, furniture, cash, petty cash, so many things. Now for each of them, we'll start opening separate ledger. That improvisation will shift it from debtor to stock. We'll cut that one big branch account into 4-5 ledgers. That will become stock debtor. Under debtor system, I told you certain transaction which involves branch and somebody else. We used to not write entry. Here we write entry for. Let's see the transactions and the entries for them. To begin with, if the goods are sent to branch, under debtors method, the journal entry is branch account debit to goods sent to. However, under stock debtor system, it will not be branch. It will be branch stock account debit to goods sent. Later, this goods sent to branch will be deducted from the purchases of head office. So the entry is GSB to purchase. That's the follow through. Then, if the expense is incurred at the branch, it can be paid by head office or it can be paid by branch. If the expense which is incurred at the head office, if the expense which is incurred at the branch is paid by head office will write the entry branch to cash under debtor system. If it is stock debtor system, we will not write branch, we will write more specific name. We will write branch expense account debit to, and later this branch expense should be transferred to branch P&L. The end. I'll teach you the entry for that. If in case the same branch expense is not paid by head office, but it is paid by branch, under debtor system will not write any entry because this transaction affected between branch and third party. However, if the expense of the branch is paid by branch and we are maintaining stock debtor system, we do write entry. Here we don't write because the entry will be branch to branch. But here it is not branch. Branch expense account debit to branch cash. We don't write entry for this under debtor system because under debtor system, one ledger what we open, that ledger itself has expense account, that ledger itself has cash account. So it will be reflecting both debit and credit aspect in the same ledger. So we ignore it under debtor system. Under stock debtor, that one ledger is cut into 4-5 ledgers. So expense is debited in expense ledger, cash is credited in a different ledger. So we can do write a journal entry. Next, if the goods are sold at the branch, it can be credit sales or cash sales. Under debtor system, for both cash sales as well as credit sales, there would be no journal entry because this transaction is affected between branch and third party. However, if it is stock debtor system, we usually write journal entry for credit sales, debtors to sales. Here we will not write debtor to sales, we will write branch debtor to branch stock. Sales account is not maintained, we call it branch stock. If in case it is cash sales, our usual journal entry is cash to sales. Here we will not write cash to sales. We will replace cash with branch cash and sales with branch stock. That would be the accounting entry. Sale of goods on cash and credit, for which actually there is no entry under debtor system. Next, in case we are doing collection of cash from debtor, under debtor system there is no entry. Why? Cash is also there within branch account, debtors is also there within branch account. So two items, debit credit, are in the same ledger. However, when you do stock debtor, it's broken into several ledgers. Usual entry for collection is cash to debtors. It will be branch cash to branch debtors. And next, what if there is bad debts or discount alone? Again, under debtor system, there is no transaction, no journal entry because it is transaction affected between branch and third party. Or if you have to write that bad debts or discount is identified as profit or loss impactful item in branch, debtors is also there in the same ledger. So you don't have to write it separately. If you write opening and closing balance of debtors, closing balance after deducting cash collected, bad debts, discount, automatically the difference will impact our profit. However, under stock debtor system, we do have to write an entry. We can write it as branch expense account debit to branch debtors. Usually we write bad debts to debtors. Bad debt is replaced with branch expense and you can credit branch. As a shortcut, instead of writing branch expense, you can straight away post it to branch PL. That will save your effort in opening one ledger. Next, we have with us goods returned by branch. Whatever goods we had sent to branch, branch is returning it back to us. We will reverse the entry what we had passed here. Here we wrote the entry branch to GSB or branch stock to GSB when the goods were sent. When the goods were returned, we will reverse it and write GSB to branch or GSB to branch stock. Next is goods sent by one branch to another branch. When the goods are sent by one branch to another branch, it should be treated like goods are sent by branch to head office and head office to another branch. Same entry for GSB return. If you see GSB to branch, GSB to branch. GSB to branch stock, GSB to branch stock. Next we have with us branch remits cash to head office. Branch is giving cash to head office. Head office is receiving cash. Head office will write cash account debit to. Under stock data system, we will not credit branch, we will credit branch cash. The cash is paid directly by debtors or outsiders to head office for the sales made by branch. Then it will be same entry like what we wrote before. Cash to branch under debtor system. Under stock debtor system, we write cash account debit, but it is not reducing branch cash, it is in fact reducing cash. Credit will be given to branch debtors. Next we have with us goods sent to branch but not reached branch yet. The goods are sent to branch. Head office has written the entry goods sent to branch to branch to goods sent to branch is sent. But that branch cannot sell the goods, branch cannot keep the stock in its closing. So we would have to write it in an account called Gita. Goods in transit account debit to branch. In branch ledger, we'll write on the credit side. Gita. And in stock debtor system, it is not Gita to branch. Goods in transit to branch. It should be written as goods in transit to branch stock account. Next we have with the same thing can happen with cash. Cash is sent by head office, not received by branch. In the branch debtors account, it will be written as Sita to branch. Or you can write Sita to branch cash. And normal loss, abnormal loss, usually there is no entry under debtor system. Under stock debtor system, we just have to still write the entry. It will be debited to branch adjustment where we usually remove load, credit branch stock because stock is decreasing. However, if it is abnormal loss, then we'll write branch adjustment account to the extent of load, branch P&L account to the extent of cost, and total invoice price will be credited to branch. And then we have insurance claim. If in case on this abnormal loss, if you have insurance claim, and if insurance claim is received by branch, head office will write no. In this case, we can still write cash account debit to branch P&L, branch cash to branch P&L. If head office receives it, it will write cash to branch under debtor system. Under stock debtors, it will write head office cash to branch P&L. Understood? Ultimately, all of this is done to determine profit. Once we find profit, that profit will be transferred from branch P&L to head office P&L under debtor system. Head office P&L will be credited, branch P&L will be debited. And one thing that you would notice in stock debtor system, to identify profit, close every ledger, close debtors, close cash, close expense, close petty cash. In this, if there is any balancing figure missing, find that number and then close it. After you close all the expense ledgers and then post it to branch PL, then you close branch PL to determine the profit. Hope you guys got this. And another thing that you should note in branch debtors and branch stock debtor system is, what if the goods are sent by head office to branch, not at cost, but at invoice price? In your debtors, opening balance of stock will be on the debit, should be there in the branch stock account at cost. It is there at invoice price. On the credit side, we should remove load. See, branch stock in the debtors account be there at cost. It is at invoice price, we remove load on the credit side using the name stock reserve. In the credit side, closing stock should be at cost. If it is at invoice price, we remove the load on the debit side using the word stock. Exactly similar to this, if in case our branch goods sent by head office, if it is at invoice price, still goods sent to branch. If it is at invoice price, load is removed on the credit. And similarly, on the goods sent to branch return, if there is invoice price, load is removed on the debit side with the same thing. Opening stock, closing stock, goods sent to branch return in the debtors ledger should be at cost. If it is at invoice price, remove the load on opposite side. On opening stock, load removal on credit side. On closing stock, load removal on debit side. And GSB, load removal on credit side. GSB return, load removal on debit. Opening and closing stock, load is removed by the name stock reserve. On GSB and GSB return, load is removed by the name same name. This is under debtor system. Under stock debtor system, if you have to remove load, something what we do is very easy and simple. Whatever the item is there in branch stock account, if it is at a higher price, for example, opening stock, load will not be removed in the branch stock account credit side. We'll write it in branch adjustment account credit. In the stock account, closing stock is at invoice price. Load is removed on the debit side, not of branch stock, but in branch adjustment account. GSB in branch stock account, if it is there at invoice price, then on this the load will be removed on the credit side, but not in branch stock, but in branch adjustment. Goods sent to branch return, what is there in the credit side of your branch stock account will be removed on the debit side, but not of branch stock, but in branch adjustment account. This load on goods. Load will not be removed on sales. Load will be removed only on opening, closing, goods into branch and goods into branch. By doing this, you will be done with your debtors and stock debtors method. Then comes the third method, which is called final accounts. This is our traditional approach, preparing trading account and P&L account. Usually what do we do? Trading account, opening stock, purchases, sales, closing stock, GP. GP you bring to P&L account, expenses, income, GP, NP. Same thing we'll do in the. But in the trading account, stock items like opening stock, purchases, closing stock should be always at cost price. Sir, what if we've sent the goods at invoice price? Something very simple. Remove load. Right? Opening stock, inner column invoice price, minus load, outer column cost. Purchases won't be there. Goods sent to branch will be there. Goods sent to branch at invoice price, less load, outer column cost price. Closing stock at invoice price, inner column, minus load, outer column cost. Find GP, bring it to P&L. That's it. That's how you do problems under stock debtor system as well as final account. Let's proceed on to the next method, that is wholesale price method. Wholesale price method is followed when the head office will treat itself as wholesaler. It will treat branch as a retailer. Head office will transfer the goods to branch at wholesale price. Branch will sell the goods to customers at retail price. This is similar to invoice price, but it has its differences. Head office, usually if the cost was 100 and if it was sold to end customer at 150 by the branch, head office used to book 50 rupees profit through the branch. Cost 100, branch sold it for 150, branch will book 50 rupees profit. Head office used to book branch profit in its P&L account. But under wholesale price method, it is different. Head office will tell my cost 100. If any other retailer comes, I'll sell it to him at 130. He will sell it to customer at 150. It will treat branch as a retailer, head office as a wholesaler. Head office on every unit sent to branch, head office will record 130 rupees sale price, booking 30 rupees profit. Later when the branch sells the goods to customer at 150, branch will book 20 rupees profit. So same 50 rupees profit under debtor system, stock debtor system, final account system. Branch used to book full 50 profit and that was later transferred to head office. Under wholesale price method, head office books 30 rupees profit, sending the goods of 100 to the branch at 130 wholesale price. When the branch sells that 130 rupees goods to customer at 150, branch will book 20 rupees. Later the 20 will come back to head office, but 20 will come to P&L of head office. 30 will be there in trading account of head office. That is wholesale price method. Under wholesale price method, head office sends the goods at wholesale price to branch, branch sells the goods at retail price to customer. Cost plus wholesale margin or load is what we call as wholesale. This wholesale margin is profit booked by head office. Wholesale price plus retail margin is retail selling price. This retail price is the profit booked by branch, which is anyways later transferred to head office. And because as I am head office and I have sent goods to you at 130, if you sell it, you book 20, I book 30, no problem. If head office has sent the goods to branch at 130, branch has not sold that goods and it is remaining in closing inventory, it will be there at 130. So head office has booked 30 rupees profits on goods sent to branch. The branch has not sold. Like how we do in amalgamation and consolidation, we can call it unrealized profit. On the closing stock remaining in the branch, profit which is already booked by head office should be reversed. Unlike debtor, stock debtor, final account system, where we remove load on opening, GSP, closing, everything. Here, we remove load only on closing. Closing stock is there in the branch account on the credit side at wholesale price. On that load will be removed on debit side, not in branch account. Head office P&L account. Why? Head office has booked profit no on that sale. I recorded that 130 rupees as sale and I booked 30 rupees profit in my P&L. It has come to my trading to my P&L, it's come, but you have not sold that goods. So to you cost is 130, but you are ultimately extended part of my business. I should reverse that 30 rupees profit. So 30 rupees, that is unrealized profit on the stock lying unsold at the branch, will be written on the debit side in P&L account of head office. That, my friends, is wholesale price. The ledger will look somewhat like this. We'll prepare a proper trading account. Opening stock should be at wholesale price, goods into branch at wholesale price, and then we'll write goods into branch returned at wholesale price, sales at selling price, closing stock and abnormal loss at wholesale. Will determine profit. This GP what you get, it is not total profit. It is not 100 and 150. It is 130 wholesale price and 150 retail price. 20 rupees profit at the branch. And we'll write branch expenses and then transfer. And whatever here closing stock is remaining at the branch, on this stock, load will be removed in head office P&L. And on the opening stock, previous year's closing it was, the load would have been removed last year, that will come in credit side in head office P&L. Remember, in head office P&L, on the opening stock, load will come on the credit. On the closing stock, load will come on the debit. Previous year's unrealized profit is realized this year. Current year is unrealized profit is postponed to next year. In P&L account of head office, previous year's unrealized profit, opening stock's unrealized profit is booked as profit. On the current year closing stock, will reduce the profit by debiting it, postponing it to next year. That's our wholesale price method. And in the next video, we'll see how to revise quickly with regard to your independent branch updation, that is abridged consolidation, detailed consolidation along with foreign branch. Welcome back to quick revision on branch accounting. This is part 2, and in this part we'll be discussing independent branch and foreign branch. If in case you have not seen part 1, you can go back and watch part 1. The link is also there in the description of this video, and once you finish that, you can come back to part 2. Just to give you a heads up, the branch can be divided into two categories, that is inland branch and foreign branch. We have covered inland branch. It is dependent in the first part. Further, that inland branch can be divided into dependent and independent. Dependent branch can be accounted under debtors, stock debtors, final accounts method or wholesale price method, and this complete thing what you see here is covered in part. Now in this video, what we'll be discussing is, we'll be revising independent branch accounting in the books of the branch, by the branch, and updation and consolidation, detailed and abridged. Further, we'll also revise foreign branch. Let's get started. Let's begin with independent branch. Under dependent branch, accounting of the branch is maintained by the head office. Accounting for the transactions made by the branch recorded from head office perspective. Whereas in this case, accounting is done for the transaction of the branch from the perspective of the branch. Accountant is sitting in the branch and it has accounting. Two parts has to be learned. First part, how to do accounting. Next part, how to consolidate this into head office. To consolidate, you have two methods, abridged and detailed. But to begin with, let's discuss how to account for transactions in the branch. Let's begin with. So whenever we're doing transactions at the branch, we need to see what is the corresponding transaction entry in the head office entries, head office books also. For the goods sent by head office to the branch, head office should record the entry branch account debit to goods sent to branch. Same entry what we discussed in the past. In the branch, we'd have to record goods from head office account debit to head office account. Throughout, in head office books, we'll have branch account. In branch books, we'll have head office account. In the head office, if you have debited branch, in the branch you would have credited head office. At the end of the year, head office account balance in branch books, branch account balance in head office books should match. If they don't, something is wrong. We need to rectify and reconcile, only then we'll do consolidate. Next transaction. The goods are purchased by the branch, not from head office. Directly, it is purchased from somebody. Payment can be made by branch, payment can be paid by head office. The payment is made by branch, goods are purchased by branch, head office will write no entry. The payment is made by head office, then head office will, if the payment is made by branch only, branch will write the entry purchase account debit to cash, just normal entry. Independent books, normal entry. What if the goods are purchased by branch? Payment is made by head office. Very simple. Branch will write purchase account debit and it will inform the head office to credit cash account. And in the head office books, we will debit branch. In the branch books, we will credit. Because it is like branch has received money from head office. So branch owes money to head office. It will credit head office account. Head office has paid money to branch. It is supposed to recover that money from branch. So head office will debit branch. Got it? What if expenses of the branch are paid by the branch? Head office will write no entry. Branch will write expense to cash. What if the expenses of the branch are paid by head office? In that case, head office will write cash account credit, branch will write expense account debit. Branch has debited expense, head office has credited cash. In branch, credit is missing. In head office, debit is missing. So head office will debit branch, Branch will credit head office. Branch will credit head office because branch owes money to head office. Head office will debit branch because head office is supposed to receive money from. Next, what if the goods are sold at branch? Head office writes no entry because branch has to pass. If it is cash sales, cash to sales. If it is credit sales, debtors to sales. If you collected money through check, you can write bank to sales also. Entries in the books of branch are very independent, just like any other separate entity. If the goods are sold to branch, sold by the branch to the debtors on credit, and the money is collected by the branch, basically money is collected by the from the debtors by the branch, there will be no entry in the books of branch will write the entry cash to. However, if the goods are sold by branch to the customers and these credit customers, debtors, they paid money to head office straight away, then what will happen? Head office has received money, head office will debit cash. Branch debtors have decreased, branch will credit debtor. So cash account is debited in head office books, debtors account is credited in branch books. There is missing debit in branch books, which will be head office. There is missing credit in head office books. That head office has collected money on behalf of branch. Branch is supposed to recover that money. So you debit head office account in branch. Branch has basically, head office has collected the money on behalf of branch. So head office will credit branch account. But this, it's like they have collected money from the branch. Branch as an asset will reduce. What if the goods are returned by branch to head office? Goods are returned by the branch to head office. So then you will reverse the entry that you had previously passed. In the books of head office, the entry is goods sent to branch to branch. In the books of branch, the entry is head office account debit to goods from head office. See this? The goods were sent, your entry was branch to goods sent to branch. Now we'll write goods sent to branch. Previously it was goods from head office to head office. I will write head office to goods from. Going further, assets are maintained at branch. The branch can say I am incompetent to maintain asset entries. I don't know. You maintain asset. When I say maintain assets, no, head office is maintaining asset ledger, not the asset. Asset is installed at the branch. Asset is used by the branch. But ledger account of asset is maintained by head office. In that case, what would be entries? If the asset is purchased and the amount is paid by branch, the asset is purchased and the amount is paid by branch. Who's maintaining the asset? Branch only. In this case, who's maintaining the asset? Branch. So branch will write the entry asset to cash. The office will write no entry. What if, begin with the heading again, asset is maintained by branch, asset is purchased, but the payment is made by head office. Then branch will write asset account debit. Head office will write cash account. In branch, credit is missing. In head office, debit is missing. Head office will debit branch because head office has paid money to branch. Branch will credit head office because branch has collected cash from head office. And depreciation entry will not be passed by head office. Entry will be passed by branch. Branch will write the entry depreciation account to asset. Depreciation because it's an expense. Asset account credit because it is the asset. This is the entry. The assets are maintained by branch. If in case the assets are maintained by head office, then wherever asset is there, the debit credit should be done by head office. Asset is maintained by whom? Head office. And the asset is purchased, payment is made by branch. If the payment is made by branch, branch will credit cash account. Head office will debit branch account, asset account. Asset account debit is recorded by head office, cash account credit is recorded by branch. So in the missing debit, we'll write head office in branch, missing credit will be branch in. What if the asset is maintained by head office, asset is purchased and payment is made by head office? The payment is made by head office. Then what do? Branch will write no entry. Why? It did not make the payment. It is not maintaining the asset ledger. Asset ledger is maintained by head office will debit branch. Payment is made by head office will credit cash. Got it? But who's using the asset? Branch. Where is the asset situated? Branch. If there is depreciation on this, that expense has to be debited in branch books to find the correct profit. But asset credit branch cannot. Why? Asset ledger is maintained by head office. So head office will write branch asset. Got it? The missing credit in branch books is head office. The missing debit in head office books is branch. Ultimately, the amount will be remitted by branch to head office. Head office receives cash. If the head office is receiving cash, cash to branch. If the head office is paying cash, branch, and the opposite entry will be passed in the books of branch. Similar to this, there was one question in the recent examination. Again, I have shared it with you people. You can check in the description. You can try that question. So far, the questions in the examination on branch have been pretty simple. Not 4 marker and 6 marker question. In the old syllabus, they used to be pretty lengthy. Now let's discuss updation, or what we call as consolidation. Branch has maintained its records independently. These records have to be now brought into head office books and then merged with head office books. How to merge them? There are two methods of consolidation. One, abridged consolidation. Two, detailed consolidation. One, abridged. Two, detailed. What is the difference? The detail in the difference lies with the accountant who's there at the branch. I'll tell you theoretically as well as practically. Now, practically what happens is, in the case of the branch, if the accountant at the branch is smart enough to prepare trial balance, ledger, journal entries will be passed, he'll prepare ledgers and he'll prepare trial balance. And the accountant at the branch doesn't know how to go further. So what will he do? He'll dispatch the trial balance to head office. Head office prepares accounting. That is called as detailed consolidation. Head office has to detailedly take item by item from trial balance, add it into their trial. However, branch accountant is slightly smart and the branch manager wants to know the profit at the branch. Not from head office, but he wants to hear it from the branch manager. So in that case, branch manager after trial balance goes one step forward and he'll prepare final accounts of the branch at the branch. Once the final accounts of the branch is prepared at the branch will send final accounts to head office. Head office does not take trial balance to update or consolidate. Head office will take final accounts of the branch and update it into the head office record. That is abridged. Here we are not taking detailed trial balance, we are taking abridged. Final accounts is summary, trial balance is detailed. Detailed line by line item will take from trial balance. Detailed. I'll take balance sheet and P&L and then abridged. The difference. Everything that's there in trial balance will be added to head office corresponding item. Every asset will have debit balance. Credit that asset, debit head office. And later you take it to respective. Every liability will have credit balance. Debit that liability, credit head office account. This is the entry in branch books. And in head office books, it will receive asset, debit the asset, credit the branch. For asset received. For liability received, credit the liability, debit the branch. And repeat, for every asset transferred by the branch to head office under detailed consolidation, branch will write the entry asset credit, debit head office. Asset transferred to head office. Head office will write asset received, asset account debit to branch. For liability transferred, branch will write the entry liability debit to head office. Head office will write the entry branch account debit to liability. For each asset and each liability. Same is done for expense and income. Expense will be usually having debit balance. Branch will credit the expense, debit head office. Head office will debit the expense, credit branch. And incomes, sorry, this is detailed consolidation. And incomes will be usually having credit. Branch will debit the income, credit head office. Head office will debit the branch, credit the income. That way you transfer each expense, each income, each asset, each liability into your trial balance. Then you will prepare balance sheet, trading account, P&L account for both head office and branch. This is detailed. In the case of abridged, head office doesn't take each asset, liability, expense, income. It will straight away take the profit of the branch and then include it. It will take trading account items and then include it. It will take P&L account items and then include it. That is abridged consolidation method. By this, we are done with consolidation. How it is. I have given in detail the entries in abridged and detailed. Next up, we have with us foreign branch. But I have done a little bit of this reference in accounting standard 11 as well, pretty much the same. Foreign operations is the name under accounting standard 11. So the operations of foreign branch can be categorized into two. One, integral, two, non-integral. Integral is extension of the head office operations is there in foreign. Non-integral is branch is treated as a separate entity. Does this matter? It definitely does. Based on the fact whether it is integral or non-integral, we will do accounting. If it is integral operations, we will try to translate opening stock at actual rate. Actual opening stock rate. If not available, we'll take the opening rate. Closing stock will be tried to be translated at actual rate of the stock, the date it was purchased. If not available, we'll get closing. If it was non-integral, opening stock opening rate, closing stock closing rate. So what is this rate? Trial balance of the foreign branch will be in foreign currency. That trial balance which is there in the foreign currency should be converted into home currency. Only then you can draft final. So the trial balance of the branch which is there in the foreign currency, how do we convert it into home currency? We should apply exchange rate. What exchange rate to apply? That depends upon the fact whether it is integral operation or non-integral. Integral, for opening stock, try actual, if not available, opening rate. For closing stock, try actual, if not available, opening rate. For non-integral, opening rate, closing rate. Got that? And goods sent to branch, we will not apply any rate to transfer. Why? Goods sent to branch is there in the foreign branch account in foreign currency. But Indian head office account, we know the Indian rupee value of it. Write that Indian rupee value. Actual value of the goods sent by head office is available in head office books. Write the same value. Don't try to write the branch value which is in dollars or some foreign currency. Then with regard to revenue items, that is expenses and incomes, these are there throughout the year. We cannot apply actual rates, so we'll write average. We'll write average both in case of integral as well as non-integral. And monetary items and non-monetary. What do you mean by monetary items? Items which can be expressed in fixed and determinable amounts of money. For example, cash, debtors, creditors, loan, borrowing are all monetary items. What are non-monetary? Fixed assets, investments, inventory, all of these are non-monetary. So if it is monetary item, under integral operation as well as non-integral operation, we will record it at closing rate. However, if it is non-monetary item, under integral operations, we will write it at original rate, that the transaction date rate. If it is non-integral, we will write it at closing rate. And then we have head office balance in branch account, branch balance in head office account. This will be recorded at the actual value. If I am head office and you are foreign branch, in your branch of records, my name is there. In my books, your name is there. In my books, your value is there in Indian rupees. In your books, my value is there in foreign currency. I don't want your foreign currency value. I have Indian rupee value, that will be recorded. But before you take that, if there are any errors, we need to do rectify. Finally, when you draft this trial balance of the foreign branch, which is there in foreign currency, when you convert it into home currency, the new trial balance in the home currency will not tally. Why? We did not multiply everything with same rate. Different amounts we multiplied with different rates. The trial balance won't tally. If it is integral operation, such difference in trial balance will be posted to P&L account of head office. P&L account of head office, remember. If in case it is non-integral branch, such difference in trial balance will not be posted to P&L. It will be kept in a reserve called FCTR, Foreign Currency Translation Reserve. Foreign Currency Translation Reserve. This foreign currency translation reserve will be maintained in head office books till the time the branch is there. Next year, difference also will be adjusted against it. At the end, when we close the branch, like we are closing this video, that FCTR will go to general reserve if there is some balance. I hope this was helpful when it comes to branch accounting. As a bonus, I have added some 3 questions, one on debtors, one on stock debtors, one on final accounts, as well as on foreign branch. One of these questions, if you can do, you will be done with foreign branch as well as every aspect of branch. Please do check the description for that video. And I hope this entire revision of branch accounting was helpful.